All right, let's jump right into this explainer and completely tear down the world's most lucrative recurring revenue ecosystem. Listen, if you've been watching the markets over the last decade, you've definitely noticed a massive shift in how the world's largest company is actually valued. So today, we're decoding the exact blueprint of the Apple compounding engine. To truly grasp this wealth creation model, we have to completely reframe how we think about Apple. The physical iPhone, it isn't actually the end product anymore. It's really just a Trojan horse. Every single time a customer buys one of these premium devices, they're unlocking years, honestly, maybe even decades of high-margin, recurring cash flow for the company. Apple isn't just a hardware manufacturer. They're rapidly becoming a massive financial infrastructure and subscription platform. Here's the game plan for our teardown today. We're going to cover the business paradigm shift, the recurring revenue engine, monetizing the installed base, the walled garden effect, the ultimate buyback machine, and finally, we'll look at threats to the ecosystem. Okay, Section 1, the business paradigm shift, moving from one-time sales to lifetime value. There is a remarkably stark contrast between the clunky, highly cyclical traditional hardware model and the smooth, infinitely scaling lifetime monetization of the Apple ecosystem. I mean, think about it. Traditional hardware relies entirely on a primary revenue event, right? The one-time sale. You're dealing with factories, shipping, huge inventory risk, and super high customer churn. But in the Apple ecosystem, the core asset isn't the unit sale at all, it's the installed base. The margins scale beautifully, the revenue is incredibly smooth, and the churn is structurally kept really, really low. And here is the staggering result of that shift. $100 billion. Apple services revenue alone now tops $100 billion annually. And the crazy part is it's still growing at double digits. To put that massive number into perspective, Apple's services division all by itself generates more revenue than the entirety of many Fortune 50 companies. Moving on to Section 2, the recurring revenue engine and predictable cash flows. So, why do investors place such a massive premium on this? Well, our first pillar is the premium on recurring revenue itself. Hardware revenue is incredibly cyclical. People might buy a new iPhone every 3 to 5 years, right? But look at what's happening underneath that surface. Subscriptions like a $2.99 iCloud plan or a $10 Apple Music subscription, App Store fees, Apple Care. These happen every single month. It totally wipes out revenue uncertainty. And it's exactly why Apple now boasts over 1 billion paid subscriptions across its whole ecosystem. But here's where it gets absolutely wild, the hyper-profitability. Traditional hardware comes with huge manufacturing risks, expensive chips, logistics, all those variable costs. Digital services, on the other hand, scale incredibly cheaply. Because the infrastructure is basically already built, the cost to add each new incremental subscriber is practically zero. Because of this massive economic leverage, some analysts estimate Apple's services gross margins at an unbelievable 70% or even higher. All right, Section 3, monetizing the installed base of 2.5 billion active devices. This is the absolute foundation of the entire engine. With roughly 2.3 to 2.5 billion active devices out there globally, Apple has effectively transformed the iPhone into persistent digital real estate right in your pocket. It's a payment platform with Apple Pay, a subscription platform for music and TV+, an ad network, a cloud platform, and a commerce hub all rolled into one. So even if hardware sales start to cool off, Apple still holds 2.5 billion monetizable connections to keep driving up their revenue per user. And here is the hidden superpower of that installed base: zero customer acquisition cost. We call this zero CAC. Traditional companies literally pour billions into marketing funnels just to acquire a single user. But Apple, they act as an instant distribution network. Because they already own these connections, they can just flip a switch and launch new services like Fitness Plus or Apple Savings instantly with practically zero marketing friction. It's a huge unfair advantage. Which takes us to Section 4. The walled garden effect. Let's explore lock-in and volatility smoothing. Think of this as the walled garden gravity map. Apple services are so deeply integrated now. A user doesn't just own a phone anymore. They've got AirPods and Apple Watch, years of iCloud photos, Apple Pay linked up, family sharing turned on. Leaving the ecosystem isn't just swapping out a phone. It's a massive, massive inconvenience. You'd have to sever dozens of integrated digital ties. This structurally eradicates churn, keeps retention sky high, and gives Apple incredible pricing power. And those sticky, recurring services do something mathematically beautiful for the business. They smooth out the volatile peaks and valleys of hardware upgrade cycles.
The smartphone market has matured, and people just upgrade less frequently today. But that smooth, upward trending line of services revenue, that provides structural stabilization. Subscriptions, cloud revenue, and app spending just keep humming along reliably right through weak hardware cycles, completely lowering earnings volatility and driving massive confidence on Wall Street.
Now for Section 5, the ultimate buyback machine and accelerating wealth creation. Wall Street literally drools over this sequential algorithm. It's a pure wealth creation machine. Step 1, start with a massive installed base. Step 2, generate highly predictable, high-margin services revenue from it. Step 3, watch that hyper-profitability yield massive free cash flow. And finally, Step 4, weaponize all that cash through relentless, massive share buybacks. You see, these components aren't just isolated business units. They're like finely tuned gears, perfectly feeding into one another. The high margins and free cash flow lead directly to those share buybacks and dividends, which mathematically drives up earnings per share, or EPS, for the long-term investor. It's a continuous, self-feeding loop. Let's actually unpack that shrinking to grow concept for a second, because it's fascinating. Apple has deployed hundreds of billions of dollars to buy back its own stock. By systematically using all that excess capital to shrink the total number of shares out there, the ownership stake of every single remaining share actually gets bigger. Without lifting a finger, each remaining shareholder artificially gains a larger, much more profitable piece of the Apple ecosystem every single year. Finally, Section 6, threats to the ecosystem. We have to stress test this engine. Because look, to be completely objective, as incredibly potent as this model is, it is definitely not without risk. It's actively under siege on multiple fronts. We're seeing intense regulatory friction with antitrust scrutiny targeting Apple's platform dominance globally. There's real margin compression risk as direct pressure mounts on those lucrative App Store commission rates. And of course, we have to consider hardware stagnation. iPhone upgrade cycles are dramatically slowing down, right alongside paradigm shifts from new AI-driven ecosystems that could threaten hardware relevance altogether. But despite those very real threats, the core takeaway from our teardown remains profoundly clear. The real genius we should take away from this explainer is that Apple is absolutely no longer just selling phones. They are selling a lifetime of high-margin habits. Every single device they sell is simply an entry point into a multi-year cash flow stream. Which leaves us with one final, kind of provocative thought about how we fundamentally define and value businesses in our modern digital economy. When you look at the incredible recurring revenue structure, the zero-friction distribution, and the immense, unstoppable cash flow, we really have to ask, is Apple still just a tech company, or have they successfully evolved into a global financial infrastructure business? I really hope you found this system teardown valuable and that it changed how you look at the hardware Trojan horse feeding this ultimate compounding machine. Be sure to subscribe to Chaudhry Zishan's channel to continue decoding these incredible business models with us. Keep learning, keep questioning, and we'll see you on the next explainer.